Hello. We
Hey,
are
buddy.
here. Shaun is with us. Joe is with us live from Austin, Texas, at Consensus. So, Joe, first, let's talk about what you guys were talking about. Then we'll hear a little bit about Consensus. But
Yesterday's price? Yeah,
what
definitely.
happened with Arkham? I have no idea. I've heard
Well,
absolutely nothing.
Sean's going to know a little bit more than me, but what I saw was that, it was a price oracle issues with this little stuff I saw, but it was about the Mt. Gox wallets and the U.S. government wallets saying they were getting ready to dump. And
Oh shit!
but then it was all a non. It wasn't happening. It was a false alert, a false positive, or whatever. But again, I want to hear Sean's take too, just because evidently there was a lot of price action going on before that alert, from what Sean just said.
Well, actually, everything happened before the fake alert. So it's typical crypto Twitter. Something happened we don't like, we didn't expect. Let's find some news story to blame it on. Whereas you actually look at the facts, it all happened. It all happened before this alert. So there you go. Like a whale took it for a drive up and down yesterday. Yeah,
right.
Mm-hmm.
Right.
The market's so illiquid. I think you can expect more of that. Like it's a classic.
It's easier to manipulate.
Yeah, I don't consider it manipulation. They're risking their money, buying and selling. That's allowed by the rules of the game.
Oh yeah, I don't mean manipulation in the terms of whatever. I mean it's a market, right? So
yeah,
somebody's buying and somebody's selling. Yeah,
they're free to do it. I mean, if they had some kind of inside trade information on the exchanges, that'd be a different matter. I mean, it looks to me. Somebody took a pop at the market. I hope they made money. Looks like they did. Fair play to them.
Good for them.
Saying, it's not a prayer meeting. Yeah.
I don't even know what a prayer meeting looks like.
You didn't grow up with those?
I've seen it on TV, man. I'm not entirely sure myself.
I went to a liberal Methodist church. Like, we didn't. Half the people in that church, it's like my parents go to a church like that. They go to a Methodist church, but they're like, no, that's speaking in tongues shit.
Snakes.
No, yeah, they go to a Methodist church that's like, I think it's Universalists that are like liberal. Half of them don't even believe. in God.
Unitarian.
Maybe it's Unitarian. Yeah, and they kind of believe. Very liberal, very. So anyway, that's kind of church I went to. We didn't have like prayer meetings. As a matter of fact. The reason I became non-religious is they brought in a professor of religion, theology, to talk about the history of the Bible. And I was like, what the fuck?
Usually those people are atheists, though. That's the funny part.
What have you people been teaching me? This is all bullshit. And so that's when it ended for me. I think I was like 16.
I brought up a Protestant and a Catholic, but that's a long story.
Oh wow. Boy,
mixed marriage.
You are an Irish conflict.
I crossed from one dark side to a darker side at some point in my life. I kind of love the Hitchin kind of view on this. He goes, like in history, there's been about 3,000 gods. How is it after 3,000 yours is the only one?
Yeah. Well, and I just love.
Although I'd love to do that snake shit. I mean, like that. Like I'd go along with that crap just for.
Well, come on down. We'll take you down to Texas.
I lived for Texas in 3 years. I didn't realize that shit happened. We should have left the bar more, I guess.
Yeah.
Yeah. It's not happening in the bars, that's for sure.
All right. So, Joe, you're at Consensus. Talk to me. What's going on, man?
Good vibes.
Good vibes.
Yeah, nothing seems like lots of building. I mean, everybody's here. I've got stacked up meetings all afternoon. I didn't get here till yesterday because my daughter's birthday was on Tuesday, so I had to stick around, for that. But yeah, thanks. Just turned 18. I'm like, where the fuck did that time go?
That's crazy.
Congratulations, dude.
Thanks, man. So that's I did my obligation was to get her to. Yeah, I had to get her to 18, right? Now I just got to cough up another $500,000 in tuition, and she'll be good to go, I guess. But no, it's I was talking to the institute. Well, someone who advises or is focused on institutional DeFi, and I said, like that incident yesterday. I'm like, even though you saw that one drop, it's like then you see rebound coming, and I said I just don't see people really selling it. as much. And I said, what do you think? I mean, I feel like there's so much institutional money in this right now that they're just banking on whatever happens. And that was kind of the consensus from these New York people, was that, between Fidelity and NASDAQ and BlackRock and everybody else, that there's some big holdings in there that are waiting. So, I mean, that's positive, I guess. And then, the vibe here is like, it's a bigger convention center than, say, the one in New York. That was the last time I was here, was one of the New York ones. So it doesn't feel as crowded. But it's like, I swear it's a big convention center. Let's put it that way. I'm like in one big room and I'm like, well, this doesn't feel that crowded. And I looked around the corner and there's like another room just as big, packed with people. So there's more people here than it sort of feels like. But yesterday, evidently, everybody's talking all about, choke point 2.0 and regulatory stuff. And I'm like, I'm not here to talk about that. I tend to stay away from that topic, but I see it being kind of like the horse has left the barn already, and now you're saying you're choking stuff off, but, Fidelity's in, NASDAQ's in, MetaMask is a new onboarding in. I mean, I just see all these developments still happening in the US. So, to me, it feels like that we're all in these little bubbles of information, maybe, and that we just see all the negative. It's kind of like interesting too, like Shaun brought up last week when, I don't remember if it was in a channel or if it was in the show, but how we talk about, like, CoinDesk will say, 100 million and flows into crypto. And I'm kind of like, that's such a nothing number in general, in a sense of how big the space is, versus whether it's net in or outflows. So I think that maybe media is really just looking for any issue to write about. And so that's why they keep beating a dead horse on this regulatory stuff, because of it. And maybe it's not as bad as we think. Is sort of the vibe I'm getting.
The whole crypto media to me is a joke. I mean, because a lot of the time when something happens with price, it's looking around for a reason. And yesterday was one of the funniest examples, because I was on Crypto Panic earlier, and they're still talking about it, going, we dumped 7.5% because of this fake signal. You go, but like, that's not even true. Like, it's really, really simple to verify that what happened with the signal that happened after all the bullshit. Yeah.
Right.
So I'm
it always cracks me up to see the headlines. Bitcoin dropped 6% on stories of blah, 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 blah. And I'm like, what the, how do you fucking know that? Like, really?
Again, most price movement is just trader games. Yeah. I mean, if you zoom out, you can see stuff, but when you're looking at kind of 4-hour candles or below, I mean, dream on, I mean, in terms of trying to read significance into any of it. I mean, even things like, if you look in the past year and a half at FOMC meetings and the J Powell pressers and all of that, there's a lot of volatility during them. But if you go to a weekly candle and I ask you to point out when this big good news or bad news happens, I almost guarantee you can't.
Yeah, exactly.
Yeah,
exactly.
It's just kind of like when you look at, like, if you're looking at 5-minute candles when you're like trading, you're like, everything looks so much bigger, and it's like, oh my God, the sky's falling. But then, like you said, you pull back to a week and it's like nothing happened.
Yeah, exactly.
It's all your frame of reference, I think, in time. And I think if we get too caught up in, trying to trade short-term moves, which is more of a, shitcoin world thing. I guess there's a lot of it in Bitcoin too. I shouldn't be saying that, but most Bitcoin people seem to be hanging out for the long haul, for philosophical reasons, perhaps. Whereas, we see a lot more short-term trading in, alts. And I think that's.
I mean, if you look at volume of trading, Bitcoin is still far ahead, and trading volume is, and the kind of stuff I'm going to show today is short-term trading, and so on. I mean, like, I can tell you as a hard ass maxi, stuff. I trade the shit out of the market. Yeah, I mean, I just will. And so I think that if you look at the most traded assets, you can actually just look at liquidity and see that, Bitcoin and Ethereum are the only assets with any real liquidity and hence the most traded. Everything else, as the liquidity reduces, you're going to get more if you're a short-term trader. As in short-term, I mean, you're trading for an hour or 2 hours or whatever. The probability of just getting chopped to death increases massively.
Yep. Niblet says crypto media are like a school clout desperate goldfish in a tiny bowl. Oh, look, a treasure chest. Oh, look, a castle. Oh, look, a treasure chest.
Yeah, the next sparkly thing. Exactly.
Oh, look, a frying pan. Oh, hang on.
Pretty
Sorry,
pitiful.
I didn't say that.
Niblet says, I just saw how in trad securities trading, acting 1 second slower on breaking news costs 7% of the price. So I see why peeps use the 1 minute candles. I don't have the stomach for that. Yeah, our MTF signal uses that too. So, all right. Well, we have a plan for the day, or Shaun has a plan for the day. Shaun, I don't want to put words in your mouth, but when you and I talked, we were gonna discuss. You're gonna give us all a lesson on what market making is, maybe what it is not, and then a sneak peek into some of your algos that I'm then going to try to copy. Not live, but I'm just kidding.
Oh, yeah, I mean, you'll have to share my screen, and I apologize. It's going to be the full wide screen because there's no other. I'm just going to cover up the thing there, so don't mind that.
I wonder, wait, maybe I can. I'm going to fix this to at least enlarge it a little. Yeah,
the only problem, Shaun, is we can't see your seed phrase.
All right.
I liked you until this moment.
I'm trying to think. What can we do? What can we do so we have? We're on 1080. Are you on 1080? Because I want to make sure that the res of the video.
You're asking all these questions I don't understand.
If you go into,
I think I'm like it's an ultra wide screen, but I kind of need to explain this. Maybe can I don't know if any of this. Sorry, you're probably seeing that I'm sliding it back. I'm just trying to cover the hang on, let's do that. I don't know, man. I apologize. I literally don't have a small screen anymore.
Can you just share the tab one tab at a time?
I can try that, except one of them isn't a tab, but let's give that a go. Hang on, dude. Stick with
me. Or you can share just a window too.
So how do I stop sharing? Jesus Christ.
Go down to present.
Present. Slides. Stop screen. Okay, cool. All right.
Yeah, try when the pop-up comes up, try sharing a window
which is what tabs. I normally do. Yeah.
Yeah. And you can go back and forth between them. I know that's a pain in the ass, but
that's a good idea. Let's do that. So what the fuck am I trying to share here? I think this one. Share. Okay, I think that should be it.
Oh, I got to add it.
Yep.
Oh, beautiful.
Oh, beautiful.
Thank you, sir. Thank you very much.
So one of the endearing bullshit things in crypto is that I love is that you're always hearing, you go around the chats about market makers or running your stops or liquidating or dumping and so on. And this couldn't be literally further from the truth. In that this is not what market makers do. So I was going to explain a little bit about what market makers do and show a pretty simple market making algorithm. But I think the first thing to do is that when you look at a market, you kind of have to categorize players. So I think the way I would categorize players are and again, this is a market maker's view of players. You've got the uninformed. These are people who are operating on a lower quality of trading information. You've got the informed. These are the people who will literally have the best information available faster than anybody else and tend to be the most profitable. You have market makers, which is a completely distinct class from either the informed, the uninformed. And finally, you have predators. So if you saw the PA yesterday, that's classic predatory play. Yeah, they'll see an opportunity. They'll have some maths going. Oh, we push this up and down. I think it was 10% up, 10% down at the end of the day or something like that. We can make 100 million. Yeah. So there are very different. Now, that's not to say that some market making firms aren't also informed directional traders or occasionally predators. But market making is a really simple thing. If you view markets as liquidity, then there are two types of players. So you've got makers and takers. A maker is simply somebody who adds liquidity on the book. So they will have orders above and below. So if you're doing limit orders, you are literally a maker, you're adding liquidity. And a taker is somebody who's market buying and selling, and they're removing liquidity from the market. And the term market maker is actually very simple. It's somebody who is adding liquidity to the market. They are making the market. And what they tend to do, if you look, this is a heat map. So the white line is the Bitcoin price. Let me zoom in. And what you will see around price at different spreads are these bid and ask walls. So you can see there's, very heavy concentration of bids on the buy side and asks on the sell side. And you can see that they pretty much are tracking price. Yeah. Okay. This is what a market maker does. So this is market making, and then you can zoom out and you can see you've got some very deep market making. But fundamentally, all that a market maker is adding bids and asks at a spread. Okay, so they're trying to hoover up some of the asset, below the price, and sell some of the asset above the price, and in that, they are making a profit, and it tends to be a very small profit. So if you look at yesterday's price action, you can see that their asks got filled, and then their bids got filled, and then their asks got filled. So that's all a market maker is. It's not mysterious. They're literally filling a spread between the bid and ask price.
So the motivation for this is that I assume that you're making money up and down, but it's also that centralized exchanges will also provide incentives to market makers, right? Because there's obviously risk in playing this.
Yeah. So I mean, the incentive is to make money. I mean, all trading is there to make money. And if you are providing a lot of volume or liquidity, the exchanges will incentivize you to add liquidity to the book. But the point I'm trying to make is that this is what market makers do. They're simply trading a spread. Right. Okay. That spread will depend on time frame and so on, but you just need to look at an order book and their activity is pretty damn obvious. Yeah. There's no mystery to this, which is they've got some technique for adjusting ask price and adjusting bid price, and on average they're attempting to make a profit like anybody else playing the game. They're also, markets don't work without market makers, because if you have no market makers, the spread opens up, the volatility opens up. And I think last week we discussed, this thing that the markets got more volatile, and a large part of the reason for that is a lot of the market makers have left. So literally there's less of this really tight bid ask liquidity to dampen price. So we're going to see more and more volatility. But the other thing about a market maker, and the reason I think people should look at it, is because a market maker is not a directional trader. So if you think of normal traders, we're all sitting here trying to divine the direction and go on, if I listen to the intonation of the Alaskan wolfhound, that sounds like the market's about to go up, so I'm going to long it, or whatever, my otter died, so that's a bad sign, or whatever way, or you use line odds on charts or order flow or anything else. Ultimately, what you're doing is you're placing your chips on the up-down casino. Okay.
Right.
What a market maker is actually doing is betting on volatility. Okay, so this will be a profitable spread, for example, between bid and ask, if the volatility is operating within certain parameters.
Okay.
So market makers are in effect almost always short volatility, i.e. these kind of moves which you go around CT and people, the market makers fight. Market makers hate this shit. Yeah, we love this stuff down here because we can just print money. There's fuck all risk and bloody. So market making is a way to extract value from the ecosystem that has no directional bias whatsoever. It's simply a bet on volatility.
Got it. Makes sense.
Yeah. So
makes total sense.
There's no price predictive element to any of class. No, there are many forms of market making. I'm just discussing this kind of most obvious and simplest one. It's simply going, look, I can extract value from the market. I can extract profit from the market, whether the price is $100 or 100,000. It does not matter. If I get my spreads right relative to the price action, I'm going to mint money whatever price does.
So the predictive nature of it for a market maker is being on either side of it and being able to make money from the trades both sides, but maintaining a tight level. So I assume it's like lots of trades, and making smaller profit amounts on those trades, but doing a lot of them.
Yeah, I mean, if you looked at the return for an individual trade, then you'd be going, why would you bother? But what you're trying to do is churn volume.
Right.
Okay. So you're looking for low risk, low reward, but you're looking to do this again and again and again and again and again. And over any period of time, then you can make a very healthy profit that is not linked directionally.
Nice.
Okay.
And why do people fail at market making?
A lot of it is just simply failure to predict ranges of volatility or unhedging. So, most of the time in most BA, market makers are making money. Okay. But then there will be that thing, the COVID dump or whatever, that will literally just blow them out. It'll take everything they made and it will take it back with return. So most professional market makers, since they're short volatility, and again, this is a really interesting concept. You're trading volatility, not price. Since you're short volatility, you will hedge with long volatility instruments like options and so on. So you're trying to create a position where you are shorting volatility by making the market, but you hedge that by being long volatility somewhere. So when the inevitable happens, and again, volatility up or down, it doesn't make any difference. Yeah, it's just when something is moving outside of your expected range or your ability to handle that move, okay, you're going to get creamed. So that could be, a pump or a dump. It's irrelevant, but it's a really important to make the point that market makers do not have a directional buy or market making itself. Now, Chuck asked the question: do occasionally market makers take a directional bias? And the answer is yes. You can bias your algos to go long or short or whatever, or to be net long or short, but you're still effectively just offsetting an algorithm that is still just trading volatility. Right. Okay. Makes sense. So, and again, there's lots and lots of different ways to make the market, but ultimately all market makers do is they are making a market by providing liquidity, and that mechanism is not directional in its essence. What it is simply a bet on volatility. Whereas again, most traders are betting on direction. Right. And the function that they serve in the market is really important, because when you're longing or shorting or buying or selling or doing whatever it is, the probability is 99% of the time, it's a market maker as your counterparty. Right. And if there were no market makers, spreads would open up massively. And you can see badly made contracts because the spread's massive, no market makers interested and so on. But it is a game of tiny profits. They're not running your stops. They have no interest in your stops. They have no interest in pushing the market up and down. In fact, if the market was operating in a $10 range for the rest of the year, market makers would be in Lambo land. Okay.
So in terms of in terms of managing this, obviously this is automated, algorithmic. I can't imagine anybody would try to do this manually. And what kind of things do market makers use to help them define where they're going to be? Is it primarily just previous price action, or are there other indicators that they pull into their algorithms? Kind of, what's the thinking process that makes this
okay?
successful?
The first, you know, I mean, you can go look. I put, you know, a bid $10 below price and an ask $10 above price. Yeah, okay, that's fine. But and that may work some of the time. But the point is that what you're really looking at is the difference, the spread between your price and your bids and price and your asks. Okay. And how do you determine those? So there's lots of different, like, detailed order book analytics, looking for holes in the order book that you think are going to get filled. You can look at order flow. You can look at toxic order flow. And there's a billion different ways to determine the spread of your bids and asks. Okay. A lot of people will simply use a moving average, which is what you see here primarily. So they'll take a moving average of price and they will offset their orders a percentage from the moving average. Because if you look at this, it looks like this is a percentage from price. If it was percentage from price, nothing would ever get filled.
Right.
Because price ticks and you move your orders. But what you can see here, these are getting filled because they're using that. You can use, you know, standard deviations off moving averages and so on. I mean, the one I'm going to show you guys today, and the reason I contact you on Sunday, Brad, because I need some form of motivation to ever finish anything. So I was going,
that's great.
To talk about this on Thursday. I'll fucking definitely have to have it finished. Yeah, it is simply that it adjusts the bid and ask based on micro volatility. So it's measuring volatility in very small time frames and then adjusting bid ask spread based on that.
Got it. And so
there's 1,000 different ways to determine the spread, whether it's uniform spread, weighted spread to one side or the other. But fundamentally, it's only about trading a spread.
Right. Makes sense. The other thing is that a lot of people have, well, market makers get a bad rap because people think they manipulate and control price, but that's not the goal of being a market maker.
No, not in any way. The best thing for market makers is a low volatility, flatline regime, because we're just going to print money like there's no
sideways
tomorrow.
Is a good thing.
Sideways is a good thing. Yeah, I mean, again, I'm not saying that some market making firms don't run predatory algorithms. Okay, but that's not market making. Right. They're not market making firms. They're trading firms that happen to do market making and other stuff. Yeah.
Yep. Get it. Totally get it. And then I guess another big piece of it is managing what you have on the table at any given time in case there are big dumps, right? I mean, the management of trade size, I assume, has to be a big part of what you're doing as well.
Yeah. I mean, so, you know, if you get down into the micro like anything, I would say this to anybody, okay? The biggest way to manage risk in any trading game is actually not stop losses or hedging. It's actually position size. Yeah.
Right.
So by managing your position size, you are managing, you are, you know, it's the whole idea of have lots of dry powder to do whatever. Okay. Because you can take the view, and I'm very much of this, that the price will always revert. Yeah. So if you have lots of, you know, the way I trade is very much about retaining enough dry powder to move my average entry to where I want it to be.
Right.
So if I'm underwater, okay, long or short, then I can just move my average entry to price because of my position size allows it, and then I can make a profit. So again, just different ways to think about this. But ultimately, if you are market making to any great extent, you are looking to hedge against, you know, the white swan, the black swan. And again, price jamming up or price jamming down is of equal risk to a market maker, because what you're talking about is a spike in volatility.
Sure.
Okay. So you can hedge volatility with options. Okay, so you can take an option straddle that says, look, I'm quite happy to manage, to make money on the volatility in this range, but if I spike out of that and I take a loss on my market making side, well, then my option straddle on the other, or whatever other way you want to be long volatility, will compensate for that. So again, a lot of this stuff, and again, I would recommend to anybody who is serious about the game of trading, is that simply having an account and deciding long short with that account is maybe not the best way to approach it. Maybe the best way to approach it is to actually operate, what I call positional trading. So that could mean I've some long, I've some short, or I'm operating. It could also mean that I'm operating, on hourly trading and monthly trading and so on. And if you mix these things up in the right kind of, the right recipe, you get a great cake, which means, one of these aspects in one time frame can be down, but net overall, as you get better at this, then you will realize that you can ride the volatilities of the market, you can ride the ups and the downs, and you will still print profit over time. But this kind of naked trading of, I'm only longer, I'm only short, is to me how the uninformed money operates.
So the only people that are really consistently making money in our markets are probably market makers.
Market makers can be great. I mean, informed money by definition are the only people who are consistently making money. Market making's a tough game. Again, because your returns are so low in percentage wise, you could be printing money for 3 months and just hand it all back. So again, just anybody getting it. No, I don't want to discourage people, because what I like, and the reason I make the market, is that as somebody positioned in the market, this gives me a pretty rock solid income stream regardless of price direction.
Right.
Okay.
Is the greater percentage of your livelihood from market making than your degen activities?
Let's say that I know pretty much how much money I'm going to make every day from my market making. Okay. Right. I can be short or long the market, and I'm both. Okay. But while I can have a reasonable prediction on range of prices, I can't tell you when, but I also have to eat in between. Yeah. so so like, I don't know when the market's going to crash. Could be today, could be tomorrow, could be in 6 months. Yeah. And I'm well positioned for that. I don't know when the market's going to pump. Could be never, could be 6 months, could be a year. Okay. I'm positioned for that. But and I do manual scalping to, it's a bit of fun. But I do know what my market making activities are going to make me tomorrow.
That's awesome. That's fantastic.
So I also don't want to put people off, because it's not as complicated as
well,
it makes. Well, you can look at the chart and see it's not complicated.
Yeah. Well, that was going to be my next question. So if you were taking somebody like me that's never done that, right? What would be the steps that you would tell someone like me to take to learn this and be as effective as possible getting started?
It's okay. So a lot of people. Okay. So what are the core skills? Because you ask yourself if you want to do this on your own. Okay. Right. So ultimately, a lot of people who get into this are coders. Because you do need to be able to code. Okay. And yet I would say the coding aspect is the least important. Okay. But what is the most important is the simple maths behind it. And again, this is not advanced calculus shit. It can be if you want to, but it's not. So you need to understand the contracts you're trading. You need to understand a little bit about how markets work. And then you need some form of mathematical ability to say, look, here's how I'm going to have my bid-ask spread. Okay. And then I'm just going to back test that. Yeah. And again, that's now. So I would suggest anybody who wants to get into this, and I would encourage people to get into it, dip your toe into it. The coding is really not that difficult. I mean, all the code is out there. You can do it in Python. getting data from an exchange is easy, and placing orders on an exchange is easy. That's all it is.
Yeah.
What you do want is some kind of mathematical capability then because all that you're doing here is determining bid-ask spread. Yeah. Where do I want my bids? Where do I want my asks? And then obviously some kind of, position size management and blah, 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 blah. But it's not that complicated. And I do think the mistake that I've seen with people over the years is that this is attractive to an awful lot of coders or would-be coders because, Python's pretty easy. It's really not that complicated to pull data from an exchange and to add orders in the books. In fact, it's a fucking joke to be able to do it. And then they go off and go, because I can read the price, read my position and place orders, I will run a market making bot. And yet it's the mathematics that count.
Right.
So
and the mathematics
I would always encourage people, and again, we're not talking about, quant level. There's lots of quants in this game. There's lots of very sophisticated models and so on and so on. But there's also a lot of, as you can see, very basic models that with the right approach do make money. And again, they make money regardless of price.
Yeah.
And if I am right about what I believe is coming, which could be just long periods of absolute disinterest in the market, this is a great way for people to extract value from the market simply. And so I would suggest anybody just team up with the right people. I'm not talking about, a team of 50 people, a coder and a maths guy and somebody who understands contracts, and they can all be one and the same people, or they can be 2 people or 3 people. Yeah.
Yeah. No, it makes sense. Yeah. And it sounds like kind of the first place people start are things like deviation off moving averages, that kind of stuff. And I'm sure there's a lot of examples out there on the web that people can find for getting started with that.
Yeah. And again, I think my fundamental point here, and then I'm going to show you my own little thing that I wrote up. To put this in context, okay, after I chatted to you on Sunday, I think I spent 36.5 minutes writing the algo. And literally that's how easy it is. And nice. I've been playing around with the parameters since then. And this is a simple, we'll show it in operation. This just adjusts spread on volatility, just to show people how simple this type of approach is.
Cool. Let's do it.
So, okay, I'm going to have to share a different window here, man.
All right.
I really should share the screen here, dude, because you need to see the algo and the.
Why don't we do this? Can you give us a close up first of the algo, talk about it, and then show it on screen?
No problem. Yep. Let me.
Great.
How do I do this? Stop screen, and this will be embarrassing when you see how I actually code. So
only for the people that know how to read the code.
Okay, so we're going into a DOS window.
Okay.
Fucking love DOS, man.
Command prompt.
I think you'll have to share. So look, this is a simple Python script. I use batch files. So I'm just going to run it. So what this is going to do is this opens a WebSocket to the exchange. It is then going to spend about 3 minutes where it is reading price and direction. And from that, it's going to simply generate a volatility model. Okay, how volatile are we now? And a directional model, and say, is that volatility to the upside or the downside? So it's just give it a few minutes while it does this. Then it will literally just start placing orders in the book almost immediately.
Wow.
Okay, so we'll let that go. So again, this is not sophisticated. There's no magic UIs or any of this kind of stuff. The code is simple. Sorry for the language, but that's literally what I code into this stuff. So,
no problem.
Once it's connected to the exchange, it's literally just picking up the price feed. It's doing some basic calculation, and once it's got enough price history, which I think is about 2.5 to 3 minutes, it's going to start the trade, which we'll see. Then I'll go to the exchange and just try to explain what it's doing, and you can actually see what it's doing. Yeah.
Cool.
While this is going on, I'll just say that this is a simple volatility model. So based on the upside, volatility, downside, and I'm talking in micro, in second time frames here, not talking about the volatility in the last day or the last hour. We're talking in the last couple of minutes.
Right.
And based on the volatility and direction, it's simply going to start smacking orders on the book. So it'll like asks and bids, and then so on. And then it does some other stuff, which is if there's too many asks and bids, it's going to consolidate orders and move them around. Okay, but again, just based on, so what you can see here is it's ticking away. So just to do that, so it's literally, if you look at this, and I know it's difficult, so it's got volatility is 46, which is very low, 44. It's up volatility, and from that, it's calculating that the asks should be $28 away from price, and the bid should be $2 away from price. That's it.
Wow.
Okay, and that's all it needs to be. Now, and again, sorry, I'm going to now go to the exchange where you can actually see the orders being added.
Cool.
So, excuse me for a minute. I know this is messy, but
no, it's all right. This works.
Also, why I wanted to try and do it on one screen, but anyway, let's. Okay, cool. Oh, no, sorry, 1 second. There. All right, so this is now the exchange, and what you can see here are this is pretty fast acting, and I'll come to that. So this is adding in, the greens are obviously bids and the reds are asks. And what this will do is about every 5 seconds, it's going to add a bid and ask onto the books.
Wow.
Okay. This is quite slow, by the way. You would normally run it faster. And from that, you can see it's $600 long. It's got, a bunch more, and then asks. And all of this is simply based on predicted volatility. To put this in perspective, so this is adding $200 every 5 seconds onto the book, which and by the way, $100 on my exchange is the minimum order size.
Okay.
So to put this in perspective, this running 24/7 over a year will do 1.2 billion in volume.
Wow.
Okay.
Wow.
The maker rebate on 1.2 billion in volume, this is just the profit from filling orders is 120K.
Damn.
Okay. And then obviously any profit you get around the spread.
And that's the rebate on the fees you would pay on the trades.
Yeah. So if you're doing volume, and again, like this account, I think has, I don't know, 150 grand in it or something. Yeah. Okay. So, you can do a significant, so you can see all of a sudden the ask spread is going up there because it's sensing upside volatility. Yeah.
Yeah.
So that's all it is. And this is all market making is. If you do that kind of volume, the exchange is going to pay you maker fees. Yeah.
Yeah. Got it.
Okay. So something like this is not going to make you a multi-billionaire, but done right, it can produce a steady income. It doesn't care what the price is. 30,000, 60,000, 7.1K. Doesn't care.
Well,
it's also an incredibly interesting challenge from the point. Challenge, it's a lovely problem to play with because it kind of hits all kinds of coding, mathematics, back testing. And I couldn't encourage people enough to do this stuff. Start small, start with a small team, again, maths and software, and just get at it. It is immense fun.
That's awesome.
Yeah. And you're also helping the market because you're adding liquidity. And as I said, it's amazing how much you can churn
right
in a very small period of time. And
well, having 150,000 in an account and making 120 annually on it is no.
That's just the fees. Then you've got the
profit. Oh, that's the fee rebate plus your profits on your trades. Holy shit! Yeah, sounds like a solid investment.
It is. Again, it's not. You're not. It's not the 100x degen directional trade or whatever people are doing, but it also doesn't carry the risk profile.
Yeah, it's not a wing and a prayer.
And it does it regardless of the price. Because remember, most of the time, Bitcoin is ranging. 70% of the time. So you place your bet on the market, and most of the time, it's simply just ranging. This kind of thing is going to make money, well done in virtually all market conditions.
Chuck asked, do market makers feel like they're competing with each other? Do they need to worry about who's being more successful?
Yeah, I mean, this is something encouraged by the exchanges. So, for example, the level of rebate that I get paid is literally a percentage of the volume of the exchange that I am providing. So let's say the exchange does $3 billion in a day. Yeah. And let's say I do a consistent, $100 million a day. Okay. In a $500 million day, I'll get a bigger rebate than in a $3 billion day. So you do find that the exchanges try to encourage activity. But yeah, it's a competitive market, and there's lots of very smart people, and there's lots of different methods, and you can go off and research them. But like anything in trading, I would caution this, particularly from market making firms, that you can look at PIN and VPIN and all this kind. You find lots of academic research. I can almost guarantee you that the successful market makers are not publishing their strategies.
Yeah.
I don't know why.
I can't imagine
the way it
why.
is. Okay. So, like, literally, that's all market making is. It's something I would strongly encourage, because you don't need to be, I would also say, don't go off and start using fucking trading bots and all of this stuff, because you need access to real time fast. And look, all the libraries are out there on GitHub. I'm sure ChatGPT could write you an interface to your favorite exchange pretty hard. Well, I know it can. And it's a bit of fun. And it genuinely is a lot of fun. Yeah.
Yeah.
It genuinely is a fascinating technical exercise. It's a really cool project, and done right, it can generate a very healthy income. Now, I'm also going to say that, if you're doing this, you don't do this and look at, a month's results or 2 months. You backtest the shit out of it, which is also, by the way, a really cool exercise, particularly when you're operating in these time frames, because there's no backtesting tool that allows you to, that I'm aware of, to look at trade history when you're looking at second or sub-second trading. So you have to go off and develop that as well, which is just great fun.
Yeah, no, I love that. Do you think you could, do you have any at hand GitHub repositories that might be people to get started with that you could?
Yeah, I'll stick one in. I mean, a great place to start is to the BitMEX sample market maker. They released a Python code for.
Oh, great!
It gives you a method to do it, but again, if you just want to, if you're not used to, because a lot of people will go off and they'll invest in kind of these really horrendous bots that are trying to be all things to everybody. Okay, it's really simple. 10 lines of code, and you can get the price string, and you can get that in in milliseconds, which means that you can then operate faster rather than using some trading bot that is designed to do all things to all exchanges and is slow. It's trust me, Dave, like, I was a coder I stopped coding in 1989. Okay. And I only got back into playing with code with this stuff, and it's really, really simple.
Nice. And I know from talking to you in the past that you also have some developers you work with, and you're constantly tweaking and playing with algos. Is that correct?
Yeah, I mean, we don't just do market making, we do predictive price directional algos as well. Most of the software that's going on at the moment is actually moving from Python to Rust, because again, build during a bear market or something, I'm told.
Yeah,
that's what they tell me. So that's what and primarily an awful lot of the work we're doing is actually backtesting. So how we do that is we have an exchange simulator we built. So we have the tick data for an exchange, and then the algo connects via an API instead of to the real exchange, but to our simulated exchange, and uses the tick data. And when I say tick data, literally every tick, and it feeds it to the algo, so we can backtest these over extended periods of time pretty fast. So
that's really cool.
That's kind of, but you don't need to do that for this kind of stuff. This stuff,
Yeah.
like again, you know, there's a lot of nuance and complexity, but ultimately all you're looking at is bid-ask spread.
Right.
Yeah.
Right.
And literally that's it. Yeah. And then your normal stuff. So as you can see, this thing is churning along, and you know, it's just printing me money. Yeah.
That's beautiful. I love it. You know, it's interesting too. And I don't know how much this could apply, but the idea of the concentrated liquidity pools on Uniswap and other exchanges these days. I wonder if some of these algorithms apply, since it's essentially the same thing, being on both sides of the trade. In the DeFi world, there are some exchanges that are doing synthetic stuff that may make this something feasible as well. But anyway, it's fascinating, Shaun. That's great.
Yeah, it's. I can't tell you as an engineer, because even though I'm a dirty big maxi trader, okay, as an engineer, this is the most satisfying stuff to work on.
Yeah, I'm sure. The experimentation alone has got to be a blast, especially if you've got the back testing capability.
That was it, guys. Sorry to do. I mean, market making is inherently a wonderful technical thing to play with and massively boring, because I will always come back to this chart and go, these people are not out to steal your stops or run your liquidations at all. Yeah, they just like this kind of PA because it's free money.
Sure, absolutely. Max would like to have you start Shaun DAO so that he can crowdfund with you and have you do it. I don't think Shaun really needs us, Max. He says, why trade to bait the market? Might as well tag along for the crumbs, or maybe offer a Shaun type algo in Brad's tool. That's possible. Calling it the DGen Investors Club. Niblet says maybe a channel for market makers. Yeah, I'll add one. That's cool.
Yeah, I mean, I obviously there's a lot of stuff that we do that, you know, and this is going to sound terrible, proprietary. But I would also say that, like, you know, I know a lot of people in the Telegram who are definitely smarter than me, definitely more competent than me. And trust me, if we can make a decent living out of this, and again, the reason I encourage it is simply to say that having multiple ways to extract value from the market is a really good idea.
Yeah.
You know, you can still do your degen shit, you can still do your swing trades, you can still do whatever it is you do, but adding this into your armory is a really, really cool thing to do.
No, I love this, and I'm kind of beating on myself right now for not having done this 3 years ago. So,
see, what haven't you done, Brad?
Yeah, exactly.
Let's add 12 more channels to the Mission DeFi Telegram chat.
Absolutely. Max Life says, I too would like to take candy from the kids. Haha. Well,
this is not taking candy. This is literally hoovering pennies. Yeah.
Yeah.
It's like, oh, there's a penny on the. I'll have that. I'll have that. I'll have that.
Yeah.
But I said, I can't. If you're an engineer or anyway technically minded, I cannot tell you just the deep sense of satisfaction of doing something like this. And I know I'm not. Chuck is going, Rust. I'm a closet Cardano fanboy. Not at all. We had a debate with a couple of coders whether we should go C++ or Rust, and I was told Rust was the way to go. And do you want to know? I have no idea, mate.
Right. Right.
Like, the only thing I do is still in Python, and I still use Notepad as my development environment. I don't think I need to say any more than that.
That'll do it. That'll do it. That's fascinating, Shaun. I really, that was a beautiful way to put everything together. And I have a feeling we'll have some folks out there experimenting some more. I think Niblets has already experimented before it, but he said that it didn't work out too well for him. But I definitely would like to be able to give this a go. Yeah, that's fantastic.
Something I would say that is one of these weirdo things that the higher the frequency, the more profitable it is.
Right.
So we've tested this over the years, so that, and again, that's why I would encourage people just to write their own, or you know, take from GitHub or Ask GPT to write their own methods of sucking data in and placing orders. It's really not complicated, but what it does give you is speed.
Yeah, right. Makes sense.
And speed counts, because the more money you're churning, the more money you're making.
Right. Right. No, that makes sense. Absolutely. Fantastic. Joe, do you have anything else you want to say on this?
No, I was just sorry I had the mic blocked because there was just a lot of background noise. But one of the things I was thinking about was that I think you kind of were touching on it, Brad, with the DEXs, and that with the AMMs built in, and like this group I'm meeting today or tomorrow, Maverick, but they've got some kind of moving AMM within the liquidity pool. It almost sounds like when you say market maker, Shaun, at like BitMEX or whatever, it seems very similar to someone say going to Uniswap and setting up a liquidity pool.
Yeah, I mean,
am I right on that?
Market making is literally the definition. The definition of market making is adding liquidity.
Yeah. So it's a way where when, even like when protocols go and set up liquidity pools at, on Arbitrum or Polygon or wherever, they're almost doing the same activity, but it's not, it is automated though. That's right. So I'm wondering if like small protocols, you think they can get the same benefit, like say going to say Uniswap and maybe dropping 100 in on both sides. Do you think it generates the same returns as say what you're doing on BitMEX?
I don't think so. And
okay.
And the reason for that is that a lot of it, a lot of the profitability is affected by fees. So if I was paying fees for like every time one of those things on the screen there gets filled, I'm making a couple of cents. Yeah.
Yeah.
Okay. And again, that's just simply anybody can have that if you generate enough volume, or normally if you buy enough of the exchange's shitcoin, they'll do it. And the maths behind that is pretty simple to calculate. But also speed. Yeah, I don't know anything, and and again, people laugh at this, I'm in the game so long. I have no idea at all about liquidity pools, AMMs. I don't even look, but speed of operation and fees, I know are fundamental to maximizing return from market making activities.
Sure. Makes sense.
Excellent. Yeah.
That's awesome. Shaun, again, consistently amazing, great knowledge for people that are listening and watching. I really appreciate it, buddy.
Anytime, guys. And as I said, just to be clear, I'm not giving away any of our algorithms, but I'm an enthusiast, so I'd love to, if people want to get into it, where to find code, where to get at it. But it's again, I come down, it's so fucking simple. Yeah, you're simply trying to determine bid-ask spreads.
Right.
That is it in a nutshell. That's what it's not running your stops. It's not stealing your candy. It's simply going short volatility and make money in the, and again, pennies. Pennies in the market, but you hoover up pennies constantly.
Oh yeah,
it does pretty damn well. Yeah. This is not big win. The price is going to ram 10%, and I happen to have guessed the right direction. This doesn't give a shit.
Yeah.
Well, and the beauty of it is you're also providing value to the market, right? You're actually doing something positive for the market while hoovering pennies, and I love that.
Yeah,
that's awesome. That's
and again, just like anything I'm going to say, I really encourage people to do it. Just always approach anything in the trading game with risk management as your number one mantra.
Yeah, makes sense. Makes sense.
Super smart. I like it. I like it because it's also, like you said, Shaun, it's, it is a stable, diversified trend or revenue stream within your overall model. So if you're cowboying around on other stuff or, perping or doing anything else, this just is the stable, keeps the lights on money that keeps rolling in every day as long as there's trades going on. That's pretty cool.
I just say euphoric there is talking about manual MMing, which people used to do a lot more, and you can still do. The problem is that without trade frequency, it's very difficult to make a meaningful amount.
Right.
Yeah.
And it's tough to base the math on that to something else.
Obviously. And again, people do that. Trust me, a lot of people do that, but it's not meaningful. There we go. Yeah.
And stressful. Manual would be stressful. I mean,
all right, 2 cents. Go get it.
You do not get to sleep.
Where's my intern? right, we're going to pay you $4,000 a year to do this.
Exactly. Exactly.
Hey, you need at least 2 interns to do that, man. You want to do this 20. They can work 12 hours a day, those interns, huh?
Exactly. Yeah. And then
beautiful.
they graduate from the Shaun Academy after a year.
That's it. That's it. Certified.
That's right. All right, fellas.
Certified. All right. Well, that's fantastic. Euphoric, Max Life, Chuck Niblets. Appreciate all of you participating today. Thank you for being here. Shaun, as usual, thanks so much for incredible knowledge for all of us. Really appreciate it. And I'm going to set up a little channel where you can post those links that you were talking about so people can take a look at it. But appreciate everybody doing it. If you're listening on Apple Podcasts or Spotify, please rate and review us. Just takes a minute and it will help boost us in the algorithm. If you're watching on YouTube, please make sure you're subscribed. Click the little bell so you get notified when new episodes come out, and smash the thumbs up so we also get a boost over there in the algo. Join us in the community where Shaun is always dispensing great knowledge and assistance to folks, and he's incredibly helpful. T.me/mission DeFi, T.me/mission DeFi. You're missing out on a whole component of this show and community if you don't get over there and join the nice people that comment during the show. They're also in the Telegram. Thanks very much. I hope everybody has a great day. Shaun, thank you. I hope you have a great weekend. We'll talk to you next week.
I'll be back to my anti-shitcoining maximalism next week, guys.
Awesome.
Excellent.
Joe, have a great time at Consensus. Be careful and, go out there and network, buddy.
Yeah, no, I mean, you know me, once they turn me loose somewhere, I'm just like, just chewing through everything. Yeah.
Yeah, buddy. Love it.
But I would want to ask you, did that Caleb and Brown interview happen?
No, it did not happen. It's getting rescheduled. I think we're doing it next week.
Okay, cool. All right.
Yep.
Because a
All
lot
right,
of people
folks.
here know about the show. That's what I was surprised about. You know,
That's
some of the
awesome.
people I'm meeting, like Maple, those
Yeah.
guys are like, hey, they love the show. They listen to it all the time. So I'm actually kind of surprised at the quasi-celebrityness going on.
All right.
But you know, it's always fun
selling merch.
having my wingman here, though. So I'm feeling a little lonely.
You'll have fun anyway. I know you.
Hey, Shaun, thanks a lot, buddy. You have a great
Guys,
weekend. And
next week.
all right, talk to you guys later. Thanks,
See you
Brad,
guys
as
later.
always.
Take care, everybody.
Cheers.